Guys, welcome back. This is episode 45 of Trading to a Million by JPS Trading. The date here is the 4th of November 2020, which is actually a Wednesday. And you can see pretty early on in this trade, it almost looked like I was filming and I was about to take a maximum loss straight away. But you're probably seeing by the title, this is the day trader's fatal mistake, and I think it's an important lesson that everyone can apply to many aspects, not just trading. Just providing a little bit of an update here that you can see it's about 20 minutes after, so in fact this position didn't hit my stop loss, which is really good, and I believe I was looking at also picking up another lot size as well in terms of that. So yeah, obviously I had my stop loss in a very fortunate place. It did thankfully form a bottom there, but I was in hindsight a little bit too early on the trigger on the first lot size there, from you can see. But that is not the mistake that I'm going to be discussing here. So jumping forward about half an hour or so, about an hour further into the day. Now we've got the US futures and they're recovering a little bit, but you can see a little bit of divergence here. This CFD is definitely making higher highs, whereas the US is making, it's only retesting the previous bounces that it just has. So obviously people in the domestic market are a little bit more optimistic than the US. Obviously the US is just closed, so it's coming off the boil a little bit here. But what I want to talk about in terms of a fatal mistake a lot of us make as day traders is sometimes if the market moves quite aggressively in the direction that you want it to go, but not how you planned it out. And what I mean by this is that let's say you take a long or a short, and within seconds or minutes it hits your profit, or it shorts crazy and it hits your profit, and makes you feel pretty good. Obviously you couldn't have planned that. You did want the trade to go that way, but you didn't want it in that sort of environment, whether it was some external factors come into play. It's something that was out of your control. So and when this happens, it's hard to realize it and really try and make a solid judgment as well there, because I know, like anyone, we've all got egos, and I'm sure when you guys do something for the first time and it hits your profit, you probably think you're a bit of a genius. I've done that many times. I still sometimes think that, but yeah. So look, as we're getting a little bit here, we're about 9 a.m. now. We're about 50 minutes away from the market open, and this is really moving in my favor, and this is where the lesson comes into play, because this is pre-market. I should have just taken the money, covered your profits. This is more than I expected, because you're going to see what's going to happen in the coming seconds. So I was thinking about it, $120 before the market start, that's fine. If it dips, we can always get back in. But I hesitated. I knew it was the wrong thing to do. Like I really knew, and I was like, no, I need to take this off, because this market could sell off before it goes to the upside. And here is the fatal mistake of a day trader. Here it comes. Oh, and look, it doesn't look that bad, and then it gets bad. And now you're in the decision where it's like, what do you do? So ended up getting out there about $150 loss, which could have been majorly avoided. And look, if we look at the levels, it was getting pretty close to the pre-levels, but this was just aggressive. And I was quite thankful I got out when I did, and I minimized my loss for $150, and it wasn't $300. Look, which is within my measures, but it's always good to avoid a loss there. So good lesson there, guys, is if a trade or whatever investment or something in your life goes your way a little bit quicker than you're expected, sometimes don't get greedy. Just take it, try and humble yourself a little bit, and take it as it comes. Anyway, I'll see you guys in the next video. Cheers.